Hey guys, so PBOC made cuts to its loan prime rates today, LPRs. Now I know that there's been a series of different policy rate cuts out of China in the last few weeks targeted at different segments, and it could be a lot to take in, but in a nutshell, here's what they've done. So in December, they cut the required reserve ratio or triple R rate by 50 basis points. This is the second time they did it in 2021. This releases liquidity and lowers capital costs for banks. Triple R is not the benchmark policy rate, despite the widely held belief that it is. It's the loan prime rate, or LPR. And the one-year LPR was cut in late December by 5 basis points, and that effectively lowers borrowing costs for sort of higher credit corporates. And then this week, starting on Monday, PBOC unexpectedly cut 10 basis points off of the medium-term lending facility, or MLF loans, for the first time since April 2020. This is as China reported a weak GDP growth rate of 4% for Q4, and about 500 billion RMB loans were due to mature. PBOC also cut 7-day reverse repo rates by 10 basis points also on Monday. But this one-year MLF is the rate that the central bank lends to commercial banks, and it acts as sort of guidance for the loan prime rates, or LPRs, which are the benchmark lending rates. And then indeed today, we saw cuts on those benchmark LPRs. Now, I said earlier that they already made a one-year LPR cut in December. But at that time, this was symbolic. And not symbolic of the easing that they were doing, but rather the opposite of what they're not doing. The December one-year LPR cut of 5 basis points is basically the lowering of a rate from 3.85% to 3.8%. That's materially meaningless. My interpretation of the messaging at that time wasn't to signal easing, but rather to underscore what they're not doing, or what they're not touching, which was the 5-year LPR, which is what mortgages reference. And 5-year LPRs remain untouched despite this meaningless 1-year LPR cut at the time. And that's why in December, when they eased this 1-year LPR, the market sold off. Because this wasn't an easing. This was a message that mortgages and real estate and property sector, they are not going to be receiving any helping hand from the PBOC. Well, today, PBOC made that cut in the 5-year LPR for the first time since April 2020, as well as another cut in the 1-year LPR. So now they're signaling a potential easing up on the ongoing property and real estate deleveraging drive. And indeed, this time, markets responded positively, even in the face of a NASDAQ correction. Hang Seng Index was up 3.5% on the day, led by the property sector. Some of the most beaten up names of late surging, right? Like Shimao up 12%, Country Garden Holdings up 15%. And then what else rallied? The other Beijing crackdown victims, big tech. So Alibaba, Tencent, JD up 6%, Meituan up 11%. But we do have to keep in mind two things. One, there's a difference between short covering and the opening of new longs, and today was vastly the former. And then number two, it's still too early to call any major policy pivot, and we need to keep eyes on Beijing, as anything can come out and negate a single policy rate cut. But having said that, 5-year LPR today was the most significant among the other rate cuts in recent weeks for policy directives from the PBOC.